Good morning. This is Arlan Suderman, Chief Commodities Economist at StoneX, coming to you around 9 a.m. from the trading floor. We have a deal. Well, we have a deal. Let's see how we live up to it. But let's talk about that deal with China this morning. After President Trump had a whirlwind tour through Southeast Asia, signed agreements with six other countries, which, according to the administration, will increase demand by about 19 million metric tons for U.S. soybeans, although no details were really given over what period of time or how that varies from what these countries already buy, etc. We have a deal with China. Now, was the deal with China really provide for us? Well, first of all, both China and the United States agreed to roll back their port fee structure implemented on the 14th of October. Um, and those were the fees on that we initially put on Chinese ships, whether flagged or built, coming into U.S. ports, and then China reciprocated with retaliatory um, fees coming into Chinese ports for any U.S. flagged or any ship that had any connections to the United States coming in. Those have been rolled back for 1 year. Now, President Trump did sign agreements with both Japan and South Korea in the past week to help rebuild the U.S. shipbuilding industry. And I think it's hoping that that will help reach its objectives while still kind of decreasing the disruptions in trade that we're seeing as a result of these port fees. China and the United States have called for a 1 year truce in those fees. China agreed to tighten restrictions on the export of the chemical components that are the precursors to the production of fentanyl. And the United States agreed to cut its fentanyl tariff in half to 10%. That brings down the effective tariff rate currently being charged against Chinese products entering the United States to 47%. China also agreed to suspend its restrictions on rare earth minerals and magnet exports for 1 year, while President Trump agreed to suspend his threat to add an additional 100% tariffs on Chinese goods starting November 1. The two sides agreed to resolve issues around the app TikTok, as well as to expand agricultural trade. There was no mention of contentious issues surrounding Taiwan or conflicts regarding computer chips. Minutes prior to the start of the meeting, ironically, and you know it was planned, um, President Trump ordered the U.S. military to resume nuclear weapons tests for the first time in 33 years in response to the growing arsenals of nuclear weapons in both China and Russia. Now, this final agreement that was reached today wasn't reached until overnight prior to the Trump-Xi meeting in South Korea. So it wasn't ready for signing. That signing is expected to happen as early as next week. President Trump is also expected to visit Beijing in April for additional talks. Now, the agricultural portion of the agreement focused on increased Chinese purchases of U.S. soybeans, grain sorghum, and other grains. Now, U.S. Treasury Secretary Bessent, himself a farmer, specifically mentioned soybeans in his comments, stating that China agreed to purchase 12 million metric tons, which is around 440 million bushels, in the current season through to January, and then another 25 million metric tons in each of the next 3 years. Now, first of all, that 12 million metric tons in the current season, China typically considers seasons in calendar years. So does that mean an additional 12 million metric tons, or does it mean a total of 12 million metric tons for the 2025 calendar year? They've already purchased about 5.9 million metric tons earlier in the year. So that would mean just 6.1 million metric tons. Now, why is that important? First of all, looking at the balance sheet that you see in front of you, if it's 12 million metric tons of additional soybeans, that would enable us, and I'm focused here now on my center blue column here for the current marketing year 2025-26, that would enable us to hit this USDA target of 1.685 billion bushels, giving us ending stocks just below 300 million bushels. That's really not tight enough to justify rationing demand further with higher prices unless we would start to see a significant weather problem developing in South America. On the other hand, If it means just another 6 million metric ton purchases, then you're looking at the export total in this next column, this tan column or light brown column, of 1.465 billion bushels. And that could cause our ending stocks to surge over 500 million bushels, justifying a much lower marketing year average cash price. So you can see it makes a big difference how this is interpreted. And I think the market is ebbing and flowing today on how it's going to interpret it until we get greater clarity on that. Now let's go to the additional 25 million metric tons for each of the next several years. This next column indicates what if some of those 25 million metric tons in the 2025 calendar year are for the current marketing year, and we get exports up to 1.745 billion bushels. Then that tightens us up to about a 5.4% stocks to use ratio and justifies prices of cash prices above $11. If in fact, though, they say, okay, we'll buy them, but they'll be for delivery in the next marketing year after September 1, going into the 2026-27 marketing year, then that wouldn't be an additional draw in the current marketing year. So how do we interpret this overall? Well, first of all, we need to look at this as providing a foundation and a base for demand. Farmers now at least know what to plan on if, in fact, China lives up to this agreement. China doesn't have a good track record of doing so. It's remember the phase one agreement during Trump 1.0, they only purchased 58% of what they committed to buying. That agreement, they made the mistake of making the commitment levels on a dollar basis, and soybeans were low priced then as well, like now. And so it meant the requirement to buy a lot more soybeans than what they had a need for, particularly coming out of African swine fever, which devastated their hog herds. This time it was actually in volumes, and so we know exactly what they need to buy. They know exactly what they need to buy to live up to it. Does that mean they will live up to it? I don't know. If they do live up to it, that is not what we saw them buying a decade ago before Brazil had really built up its production, but it is. And if you add it all up, 3 years at 25 million metric tons apiece, plus this 12 million metric tons, that's about 87 million metric tons of demand. And as I told a reporter earlier today, it's probably about 75 million metric tons more than what they would have bought without this agreement. So is the glass half full or half empty? It's half empty from the standpoint of it's still a decrease in what they used to buy from us. Glass is half full from the standpoint that this buys us some time because the U.S. is in a transition phase now, transitioning its primary demand base from depending on China to depending on domestic demand built around the biofuel program. And we haven't fully got that biofuel infrastructure built yet. This allows us to do that. And in fact, if they do live up to it, the biofuel demand plus the 25 million metric tons probably gives us enough demand to justify shifting corn acres to soybeans. And I think that's one reason why we'll see the corn market at times that soybeans rally, corn rallies as well, if in fact that's an association with a belief that that soybean demand is actually going to be there. Now, Secretary Rollins of the USDA also said that grain sorghum and other grains were included in the agreement. We really needed that, and that affects corn as well, the grain sorghum purchases if they happen. USDA has the grain sorghum export target for this marketing year at 225 million bushels. China quit buying U.S. grain sorghum essentially about 14 months ago, long before the election. And so with that absence of Chinese buying, we only exported about 95 million bushels. So I'm not sure where USDA thought we were going to get the 130 million bushels worth of demand without China there. But if China does come in and buy, then maybe we can hit that target. And that takes away the need of grain sorghum to find its place in ethanol and feed, displacing corn demand. So that's another positive for corn. And then as we look at China's total feed grain deficit for this coming year, you can make an argument that it's as high as 30 million metric tons. Would they buy that from elsewhere? Will they just pull it from the reserves? Or will they buy it from us? Probably some combination of that, but it does justify increasing imports of feed grains, be it grain sorghum, be it corn, be it barley, whatever. And so there is the opportunity for a more favorable U.S. export program of feed grains in addition to soybeans in the coming year. Now, we'll see how this all plays out and whether China does that, whether they follow through. Absent in these discussions were some contentious issues, as I said, regarding Taiwan, regarding the computer chips, and several other contentious issues that were not dealt with. This whole thing could fall apart at any point. But what I have observed is after, and I mentioned in my videos last week, that I felt like we would get some indication of how the fourth plenum meeting, and this meeting of the Communist Party of China last week, how that went for President Xi by his approach to these trade negotiations. I felt like if he had a strong power base there, he felt that strong power base that he would probably take a strong stand against Trump. But if he felt weakness in his power base, that he would probably be eager to get an agreement so he could calm the international waters in order to focus on domestic issues. And that's what it has the appearance of being at this point. And so we'll see how this plays out in the days ahead, what additional details that we get from it. And I'll bring those to you as those details become available. Until then, I hope you like and subscribe if you want to continue to get these updates from the trading floor.